All right, today we're diving into something pretty huge. We're talking about a record-shattering quarter from the Canadian energy giant CNRL. In a market that's, well, all over the place, they didn't just have a good quarter. Nope, they posted the best numbers in their entire history. So we're going to break down exactly how they did it with a playbook that's really, really smart.
So that's the big question, right? How does a massive company like this, an energy giant, pull off its best quarter ever, especially right now? I mean, what does a record like that even look like in real numbers? Well, it looks like this. A jaw-dropping 1.6 million barrels of oil equivalent, that's BOE for short, every single day. Now this number, it's not just a personal best for them. It's the engine behind this whole success story. But listen, a big number is just a number. The real story, the interesting part, is how in the world they actually got there.
And let me tell you, this was no accident. This wasn't some lucky break with oil prices. No way. This was the result of a very clear, very powerful two-part playbook, and they executed it perfectly. So, let's crack it open and see what's inside.
Okay, first things first, let's really wrap our heads around the sheer size of what they pulled off here.
Yeah, to really get a sense of this, just look at the jump on this chart. Over on the left, that's their production in the third quarter of last year. And on the right, this year's record. That is a 19% increase in production. Think about that for a second. For a company this big, growing by almost a fifth in a single year, that is absolutely monumental. And you don't even have to take my word for it. The company's president, Scott Stoth, he lays it out right here. He says it's a mix of two things: accretive acquisitions, which is just a fancy way of saying they bought stuff that made them money right away, and organic growth. And those, right there, are the two parts of the playbook we're about to get into. All right, so let's really get into the nuts and bolts of this playbook. Buying smart and operating smarter. This is the secret sauce. This is what powered those incredible numbers we just saw. You can really think of this as a classic 1-2 punch. First, you've got buying smart. That's all about going out and adding the perfect new pieces to your operation. And then, bam, the second punch, operating smarter. That's about taking everything you already own and squeezing every last drop of value out of it. So let's look at that first part, buying smart. And really, this isn't just a shopping spree. It's about making really targeted strategic buys in these super valuable areas, like the Duvernay and Montney. But the move that's just genius? It's this AOSP asset swap with Shell. Instead of just buying something, they basically traded puzzle pieces with their neighbor. It made both companies' operations way more efficient. Now that is playing chess, not checkers. Okay, on to the second part of that playbook, operating smarter. And this all boils down to one super important thing: operating costs. Just think of it like this. It's the cost to manufacture one single item. In this case, 1 barrel of oil. The cheaper you can make it, the more money you make on it. Simple. And let me tell you, when it comes to keeping costs low, CNRL is one of the best in the business. How good are they? Well, check this out. Their cost to get 1 barrel of synthetic crude out of their oil sands mining operations is just $21.29. That is an incredibly low number, an industry-leading figure. And that doesn't happen by accident. It's all because they run their operations with insane efficiency. And if you need any more proof of just how efficient they are, get a load of this. This is their upgrader utilization rate. And yep, you're reading that right, 104%. That means they are running these massive, incredibly complex facilities not just at capacity, but above their designed capacity. The race car analogy is perfect. It's like taking a car built for 10 laps and somehow getting 11 laps out of it race after race. So, okay, the company's crushing it, they're breaking records, but so what? What does that actually mean for the people who own the company, the shareholders? Well, that's what this next part is all about. How they turn all that success into cold, hard cash for their investors. And the big story here is just wow, look at the consistency. This isn't a one-time thing. We're talking about 25 consecutive years of dividend increases. For a quarter of a century, through every market crash and boom you can think of, they've reliably given more money back to their owners. That kind of track record is just incredibly rare. And in this record-breaking quarter, it translated into $1.5 billion going back to shareholders. You can see how it breaks down here. The huge slice of the pie, $1.2 billion, went out as direct dividend payments. And that other $300 million, they used it to buy back their own stock, which makes every share that's left out there just a little bit more valuable. But let's zoom out from just this one quarter. Year to date, so far in 2025, Canadian Natural has returned a massive $6.2 billion to its shareholders. I mean, that's just a staggering amount of money. It's a perfect example of taking success on the ground and turning it into real, tangible value for investors.
Okay, so the past performance is crystal clear. It's incredible. But you know how the market is, right? It's always about what have you done for me lately and what are you going to do next? So for our last section, let's look ahead by exploring the big questions that analysts are throwing at CNRL's leadership right now.
And this is probably the most obvious question on everyone's mind. It's like, okay, great, you're producing more oil than ever before, but can you actually get it anywhere? I mean, all that production doesn't mean a thing if it's stuck in Alberta. So what's the plan to get it all to market? Well, the company's leadership was pretty clear on this one. They are all over it. They're busy locking down space on the big pipelines, especially the newly expanded TMX. And their big point was that having more egress, basically more highways to get the oil out of Western Canada, is a good thing for everybody. It's helping to stabilize prices, and they pointed to TMX as a huge game changer for the whole market. All right, the next big question moves away from pipes and into politics. Anyone who follows this space knows that in Canada, the relationship between the energy industry and the federal government is, well, it's everything. So naturally, analysts wanted to know, what's the vibe with the new folks in Ottawa? And their answer was basically one of cautious optimism. You know, they're seeing more positive signs, they're happy with the conversations they're having, but they're not popping the champagne just yet. As they said, the devil's in the details. They're still waiting to see what things like carbon competitiveness will actually look like on paper and how it'll affect their day-to-day operations. So there you have it. That's the inside story of CNRL's absolutely massive quarter. They've got a winning playbook, they're running it with incredible world-class efficiency, and they're delivering huge value back to their owners. But, you know, the road ahead is never smooth. There are always challenges, whether it's market swings or new government rules. So the big question isn't if they're going to face another challenge, it's how this incredibly well-oiled machine is going to take this winning formula and adapt it for whatever comes next.